Afternoon, ladies and gentlemen, and welcome one and all to the trading room this afternoon for our market report weekly breakdown. Hope you're all doing well out there, team. Had some pretty significant gaps over the weekend. Was looking at these earlier on today. Possible for some nice gap fill opportunities, considering we're lacking in the fundamental analysis department. Before we get on to that, I hope you are all doing well and had a nice weekend. Good afternoon to everybody out there on YouTube as well. Good to see all of you. And for those of you inside the trading room, of course, a pleasure as always. Now, we've got a relatively balanced week, I would say, this week. It is a 4-day week for myself. I will be... actually... Do you know what? Yeah, it's a 4-day week, I believe. Yes, it is. Yeah, it's a 4-day week. 4-day week for me this week. So I will be flying off to Krakow and then making my way down to Chechnya and Slovakian border to go and throw myself into the thick of some very dangerous stuff, which is essentially what I enjoy doing with my spare time, apparently. But I will fill you guys in as and when that as and how that develops. But anyway, yeah. So fundamentally, this week we don't have a great deal going on. I will, of course, be loading up the market report momentarily. Let's get that done. Let's just get that done quick. Hey, good afternoon, Core Tim. Good to see you. Good afternoon, Tony Tone. And good evening to you, Braden. Good to see you, buddy. Hang on a minute. Where the bloody hell's the market report been saved to then? There we go. That's a bit better. Excellent. Oh. Excellent. Right, zoom that nicely in so everybody can see it. If anyone's struggle with vision. All right, let's load that up inside the training. It's Discord really needs to introduce multi-monitor support for streaming. It's very clunky, and I thought in this day and age it wouldn't be much of an issue, but it bloody is. Change stream. There we go. Okay, everybody see the report? Okay. Good afternoon to you, H&C. Good to see you, bud. Yep, excellent. Alrighty. So, as I was saying then, fundamentally, it's a very, very quiet week this week. We will get onto that in a moment, but just to give you a bit of a spoiler, because it's not much of a spoiler, we have the US PPI, and then we have Gov Bailey, which is tentative because he's actually giving multiple speeches throughout the course of the week. And that's what we've got. So we've got a little bit of UK possible volatility throughout the week due to Gov Bailey, and we've got maybe a 1 or a 2 out of 10 on the scale for the US PPI, which is apparently this time around going to be relatively in line with analysts' expectations. Is what I believe the algorithm is really telling us with that. So yeah, it doesn't look like there's going to be much of anything. However, and this is big news. This is the biggest news, okay? However, Trump posted on his own social media platform a picture of himself as Christ. And he had his US soldiers floating around in the background, and the picture is of him as Christ in his red robes. As Jesus Christ. So that obviously is the major headline of the week at the moment. I can't believe the markets haven't digested that data and just spiked even more as soon as they realized that he really was Jesus Christ. It's just it's just getting insane now, isn't it? It really is. I mean, it's always been insane, but now it's reaching all new heights of insanity. Then when we have the leader of the United States, posting pictures of himself as a biblical figure, But anyway, the markets didn't really get inflated that much. In fact, the US 30 took a nosedive, -1%. We actually had a bit of a dive in the European stocks this morning, down 1%. Pride comes before the fall. Yes, it's very, very, very wise, Tony Tone. That's right. I believe so. In other news, we've got I say a space and a half. It's a bit of a weird one, really. We've got a couple of spaces opening up in our private tuition training program over the course of the next 3 months. So it's not right now, but I appreciate it's a little bit more of an upmarket service, a bit more of an expensive service. If anyone is interested, please feel free to reach out to me. I'm not going to be marketing it as I don't usually, but if you are interested and you want to have a chat about what that looks like and the training that's provided and what the sort of outcome, the designated outcomes are and the course structure and so on and so forth, please feel free to reach out. I've got a few people on at the moment. We're coming to the end of a couple of them, and so the next lots are opening up. This will be for Q3, Q4 of 2026, as I don't do it. It's not a service that I offer frequently. I don't do many of them per year. But just, as a heads up, if you're interested, please feel free to reach out. Now, aside from that, let's get into the thick of it. This week, we are looking at the 4 main trading opportunities, being the Dow Jones taking our indices highlight spot, the Euro Yen for the FX slot, UK Brent for our energy markets, and silver over and above gold this time around. Silver's actually seen some really nice trend structure in this corrective that we're looking at the moment. I think it's probably got legs to go for one more run to the upside before we continue trading lower. On the daily time frame, looks exactly like a flag pattern. So at this point in time, I could still see silver selling off a little bit more, but I think, as I mentioned, we've still got a run to the upside to go. So in terms of the US 30 Dow Jones, we had big gap down over the weekend. It is traded lower so far today. We're down at -1.12% daily change, but it is coming into liquidity. And from this point on, because it is such a big point of liquidity, the path of least resistance for me is definitely sitting higher. So potentially looking at that continuation to the upside as a result of coming back down to liquidity, which is also going to be a really, really nice buy side tactical play for us. If we can work out the entry there, we need to find a decent breaker structure, but I don't really have too much of a fear for that. What I would like to do is take a long here and then have a stop loss below the zone. That would be the ideal situation. So we'll check that one out in a moment anyway. Moving over here to the Euro Yen, a really nice solid trading opportunity this week in the FX market, to be honest. Great point of liquidity up there above price. It's reached this area before. We had a massive commercial sell-off as a result, which was fantastic. We didn't actually, we didn't manage to take all of the profit from the short on the first run round. But nevertheless, it looks really good. And I would like to see that Euro Yen come back down to this area throughout the week. So again, we'll be looking for breaker structures for shorts back down to the level of supply. And then we can just make a decision from that point on. I should imagine, especially given the fact that I'm only here in 4 days this week, not the full 5, that this trade idea may end up completing by Thursday, ideally, and then we'll just be done with it. And then I'll wait until I get back on Wednesday next week to then lock and load in the Euro Yen again. But the structure of the Euro Yen is so nice at the moment that I think we should be looking to focus our attentions there, even though we're not looking to trade the FX market day to day. That's a nice behind the scenes one that we can just have running as a little bit of an additional revenue stream whilst we're trading everything else. Moving down here into the energy markets this week, UK Brent, big gap. I've actually got UK Brent open in the chart right behind the report at the moment. Really big gap up here. So I'm thinking move down, break a structure below around 102, big push down into liquidity at 96, and then we can ride the run back up to 102 after that. I will, of course, analyze that with the charts and yourselves in a moment, but that one is potentially looking quite good as well. Where's the report gone? There we go. And then finally, silver. Now, I already touched on silver really at the beginning of the report breakdown. We are looking at a push first down into the point of liquidity, start buying along with the commercials, and the fact of it being a rejection from the lower limit of the channel there as well. A couple of nice contributing factors there from the technical analysis point of view. Get the decent breaker structure and then a rally back up to the previous highs. I mean, we're looking at a decent risk reward on every single one of these trades at the moment, and they're all relatively decent setups. We need them obviously to fall into line with the geopolitics and things that are going on behind the scenes. But for me, the biggest risk to any of these is the Tangerine Man and him opening his mouth. So if he doesn't open his mouth and doesn't do anything even more crazy than call himself Jesus Christ, then I think we're going to be all right. I think we'll be okay. Now, moving down into the market challenges this week, US PPI, sorry, not a 1 out of 10, is it? US PPI is registering as a 3 out of 10 in terms of its market impact to these 4 trading opportunities, along with BOE Bailey, who is speaking all throughout the week, multiple times, and he's registered as a 1 out of 10. In terms of state structure volatility, we have got probably one of the most balanced weeks I've ever seen, actually. Every single one of them, even the VIX, is fallen into the area of marginal error. It's completely balanced. We don't have any major outliers at all. The only thing I would say that's a notable call out is the VIX index, because the VIX volatility index was at 57.5 last week, and having it at 53.2 now, that's quite a significant jump down in market volatility. So we may have a little bit of a slow week ahead. Now, in terms of the EO, we've got broad market impact, US PPI 4 out of 10. We've got Bailey at a 2 out of 10 respectively. Money flow, commercial and non-commercial shorts, again, really incredibly balanced. The fixed income market is the only one that are a little bit skewed at almost 53%, but most of you guys don't even bother with fixed income markets, to be honest. They're a very good gauge of where the economy is going, and so therefore good for stocks, good for FX market, in terms of cross-asset correlations. But honestly, the fixed income markets at the moment, on their own, 52.84% long over short. It's interesting, to say the least. Moving down into the equities in focus, we've got a completely new basket for you guys this week. So I don't think you would have seen any of these. Please definitely make sure you check out Snow and Axon. Both very interesting equities at the moment to have a look at. I do appreciate, by the way, I will just say, I've seen really good feedback from Jack, really good feedback from James and Coratim as well. You guys, little shout out there for the work that you've done in the Investment Portfolio Hub. Really good effort. If you haven't made it to the Investment Portfolio Hub yet and handed in, I hate the word homework, but the projects that I've been dishing out, please do take the time behind the scenes and get it done, because the exercises I've constructed coincide with the weekly training for the investment stuff. It all coincides together to make a really good course. And don't take it lightly, guys, because honestly, if I was training someone 1-to-1 and having that personal time with them doing this, it would cost thousands. It really would. I would charge thousands for it. If I don't say so myself, a lot of effort and a lot of thought went into the investment side of things. So make the most of it. Make the most of it. It's worth your time. It really is. If you want to get into investing more and you want to be thinking about your futures and stuff, and having a little bit more financial freedom when it comes time to retire or whatever, or maybe in 10 to 15 years time. I know some of you guys are a bit younger and you want to buy your first home, whatever. All of that information is definitely going to be helping you out. So make the most of it. And then finally, we've got the Spotlight Equity of the Week. We've got Arista Networks, ANET. Do you know what? I've just realised I haven't updated the Arista description yet, so I'm going to have to get on that. I've got it in my Word document because I type everything up in Word and then I just transfer it over to the thing because it's annoying typing in such small writing in there. That's fine. I will update that and resend the report out after the session, so stay tuned for that. I will update it inside the UTC My Report channel. You guys can just download your fresh copy. But anyway, really, really good, interesting company at the moment, and they are due a potential for a merger, which is on the horizon. It looks very interesting. It does look quite promising. I think it will be good for their bottom line, and naturally, you generally see a pretty big uptick in the stock value when something like that occurs. Or even more is when the rumor of it happens. The rumor creates the inflation in the asset value. So if it actually happens, that's great. If it doesn't, you're probably still going to make 15-20% on it anyway. If it goes to plan. So please feel free to go and check that one out. And then finally, we got the institutional buying interest by sector. And this week, second place at cloud software. Renewable energies is not that surprising. Obviously, AI infrastructure has been number one for like 3 or 4 weeks running now. But we also have defense technology back in fourth place there at 1.7 billion over the weekend. So that's an interesting one as well. If you want to find stocks to invest in, look at these companies. Look at these sectors. Anything within these sectors is going to give you a good 14-day growth. Anything. Just look at it, coincide it with decent technical entries, obviously looking at your points of liquidity like we do day to day. But anything in here that has a lot of significant hedge fund investment is going to be a decent opportunity for at least 14 days. So at the very least, better if you leave it, get my words out. Better if you leave it for longer, but 14 days minimum, you'll be looking at hopefully some decent returns out of anything within these sectors that are posted down there in the bottom left. Right, just quickly then, disclaimer time. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in financial markets involves significant risk and may not be suitable for all investors. If you want to know more, please head over to www.the-utc.com/T's and C's and you can go and check it out all there yourself. Rightio, that's that done and dusted. Let's get over to the charts then and see what's occurring over there. So first of all, UK Brent team, we'll cover this one off quickly. Nice big gap up, closed out at 97.238. We came right up to the highs here. Overnight, we've not really moved anywhere, but we're still steadily holding the 104.69 point. If we get the breaker structure down here, which I believe we will, then we've got a really nice run all the way down. I've marked out the white line here because this is where I would ideally like to take the trade to. Obviously, it would be great to think it's going to come all the way back down to 95, but I'm actually really just looking for it to fill the gap. As soon as we've filled the gap, we can then look to move on. So breaker structure down here at 102, big push down into 97.306. We take the money and we run. If the market does end up coming back down to liquidity here at 95.50, that is great. We're happy. We can then lock in load. Breaker structure point's already in place. That's 96.90. Trigger the trade essentially where the white line is, to be honest. We can freshen up our long there. And then we ride the run back up to the 102 point and we've just doubled up our money. So really nice bit of structure there on UK Brent. Hopefully we've got enough time this week to fill it in. It does depend, of course, on the market dynamics, the context and stuff going on behind the scenes. But, oil's a really incredibly volatile asset at the moment. We are looking at the ceasefire coming to an end as well. There's definitely going to be things happening behind the scenes that are going to shift this thing. So we just need to be ready for it. Now, moving on up to the Dow Jones. We've got nice big push. Now reached liquidity, which is great. This is a lovely anchor point. We've actually come up here multiple times. This one being one of the most prominent ones. We've come up, bite point, big commercial sell-off down there. So definitely lots of money in the market. If we start to see, because you can see what's going on here already on the 15-minute time frame. Look, big commercial sell-off. We've come down. We've reached this low. Market's filling up with orders. There's lots of money flowing back into the market here. What we want to be doing now is kind of getting ready for the long. And that there would be a decent place to consider doing it. I was thinking of below this area, which would make a little bit more of an aggressive entry. But I want to see that conviction from price action. I want to see the confidence, right? So it needs to come up, break the structure at around 47.60, and then, guys, we could very well be looking at an intraday long in the US 30 Dow Jones all the way back up to the high there at around 48.22. You would find yourselves throughout the week, if we do end up pulling that off, hedging in the indices, in the US indices, because say, for example, we get to 48, we've got a real decent amount of profit in the tank, then we will not be trading the Dow Jones tomorrow. We will be trading the NAS 100 and the S&P, and we could end up shorting them. So we're going to be long the Dow, we're going to be short the other two. Okay, so just to give you a heads up that may happen, and that's absolutely fine. That's just part of the process. The great thing about that is, if we come up to this area here, we're covering the potential loss in the Dow Jones, the unrealized loss in the Dow Jones, with the profit from the NAS and the S&P if we short them. Okay, so we're short covering the long that we have in the US 30 Dow. So it's all part of the process. Just don't fret about it if it comes time to short a couple of indices, even though we're long the other one. Next up, so we've covered indices. We'll obviously prepare you guys for the US Open this afternoon. That's fine. Energy markets done. Right, let's have a look at the silver markets then. So silver at the moment, we've come down close to liquidity. We didn't quite get there, did we? Another couple of 15-minute candlesticks, I think, will do it. Get back down to that area there. We want to see 73.50 achieved. And then we can look at the continuation up. Now, we're not going to jump in this trade until the market breaks 75, let's say 75.10, for example. That's definitely going to give us the confidence we need to get the continuation to the upside. Now, I put the TP there, but the TP realistically is more about here, and it just depends when the market reaches that median line. That's what we're going for. So 75.10 is about there for entry. Stop loss is 74.40. That's absolutely fine. Don't really want to change that. And the target profit, is going to be whenever price action reaches that median of the channel that is trading in at the moment. Liquidity is there. That's where liquidity is. So yeah, that's what we're looking at for silver. That's the silver play. And then moving on down to the euro yen, as you guys can see here, let's go up to the daily for a moment. This is absolutely golden. I love markets like this. Huge extension in this move. Lots and lots of commercial bids. We come up to this point, massive commercial sell-offs, which have happened multiple times in the past. This is what I'm waiting for. Now, the market could well break out of this. We could get a bullish breakout, and that's absolutely fine. But if we look at this most recent candle, right, and compare it versus the previous, let's say 3 even, it looks fundamentally different. It's much shorter in its size. We also have wicks both sides of the candlestick, a significant wick down here as well. And the body at this moment in time, obviously we've got a fair time to go before it closes, but at this moment in time, it looks like it's hitting a brick wall. So that's all really good news for us in conjunction with our bias. So the trading opportunity for this one, we want to get in quite aggressively. We don't want to sit on our hands too much with this one. And I'll be looking at an entry possibly at around somewhere like that, so that we can have the stop loss as high as possible. Targeting down there at 185.50. Stop loss for this one probably going to be about there for a 1 to 2.86. So about 50% of the margin in that big daily zone. And that's what I'd be looking at for that euro yen. So yeah, not bad at all. Not bad at all. Right, let's move on to the rest of the US indices then. So this afternoon, I think we will leave the intraday trading opportunity, or the day trading opportunity, sorry, for the US 30 Dow. Just focus on the intraday, intra-week one. If the market breaks structure today at 47.601, then please feel free to take the trade. The stop loss for it is going to be, I would say, down at around 47.36. So that's that. In terms of the NAS 100, the Standard & Poor's, let's just build this out for a moment. So we've got nice floor down there. We've got the ceiling above price. That's about here. Do have a couple of breakout attempts. The market's trading higher than lower at the moment in the available margin. I'm not in the mood today on a Monday afternoon to go for the big bad breakout. So if the market does end up going for the breakout, It's, again, this time of day, it's going to be a full break close retest continuation that's necessary on the 15-minute time frame, and there's no way we're going to be waiting around for that long to do it. However, if the market comes up to the high and rejects, then we're going to be in play. For me, I mean, that's got to be a solid break of structure point there, which is not bad. But I'm just thinking, do we have time? It's got good available margin. I'm wondering if we could, I mean, what's the margin like on that one? We could potentially trade that anyway, couldn't we? Yeah, we could take the rejection back down to here. So if the market continues pushing up, we get into liquidity up there, we start coming back down, we could just trade that today. That could be our day trade for the stock market open. So say that area there, for example, is probably a pretty decent area to get involved. You've got margin before a TRF is in play at around 25.078, which is going to be decent enough. So then entry, targets, and stop. Yeah, probably leave a stop loss there for around a 1 to 3, which is really nice. Don't think I'd be interested taking the trade from here short though. Yeah, definitely not actually. So it would be the push up to this area, come back down, and that's going to be our intraday trade or day trade. Let's go that one. S&P 500. Very similar to the NAS 100, which is annoying because it does mean that we're not going to have availability on longs, actually. That is one hell of a gap. Wow. That is one hell of a gap. Yeah, okay. I'm wondering, could we have a long in the S&P based on a gap fill? Or partial fill, to be honest. And is that going to... are we going to need a break close and a retest of this area? I think we will, won't we? So it is going to require a BCR. Just because it's quite a big inflection point on the 1 minute time frame. Whoops. It is quite the inflection point on the 1 minute time frame. So a break close and a retest on the 1 minute time frame above this area, and then we can jump in for the long and ride the rally back up to 68.10. That's going to yield, well, it depends where you jump in this area and here. But depending on where you get in, you could have anything from a 1 to 3.5 to a 1 to 2.5. So it really does, you know, it's really down to where your entry is, where your fill is. So that's going to be that. NAS 100 long. NAS 100 short after reaching this area, and S&P 500 long. A break close and a retest continuation. Download that one. We'll download that one. Now, I will download the rest of them, I suppose. But they, of course, are on the market report. Yeah, it's about there, isn't it? So short, that's going to be to that level, and then the stop loss about there. Download, and silver. Download, and euro yen. Oh, wrong side. And download. Okay, there we go. Brilliant. Okay, team. Well, that's about it. I will post all of these out in the UTCF updates momentarily as soon as the session's done here. Are there any questions or anything else? Actually, I'll tell you what, before I go, I am just going to have a super quick look and provide James. Was it James or was it Jack? Jack and James. Jack and James. I'm going to provide Jack and James some updates on their trades super quick, as they have asked, and I did promise I would do it. So, James, just going to upload my trades from yesterday for opinion so I can continue fine-tuning. Please let me know your thoughts. And the last one, S&P 500 short. I wasn't at the chart for the initial breaker structure, so this is a later entry when price retested the BOS. Okay, let's have a look. Minute 1, Wall Street 30. Note to you, James, trade panels, get used to using them. Even if it's just using horizontal rays with attachments saying E and T and S, just so we very clearly understand what's going on. I believe from looking at this, you've taken a long very aggressively after a breaker structure. It might not have been that aggressive, actually, to be honest. Yeah, you got a breaker structure from liquidity. The market's come back down, spiked you out, and then went for it. Good trade. Yeah, absolutely fine. Probably say that the breaker structure was a tad high looking at this. Definitely could have had that BOS slightly lower, and so therefore had your stop loss lower, which may have made the trade a winner, plus made it a better risk-reward ratio. But overall, you've definitely on the sort of right track with that one. What one's this? Minute 15 again. US 30 Dow Jones. I don't quite understand that one. I think you've taken. Oh wait, sorry. That's just the first trade that's consolidated, isn't it? That's the same trade. So yeah, now that that's blown up, there's even more reason actually not to have taken the bounce on that one, because you've got the highs up above and you've got the lows down below. The median is what you're trading there. So I wouldn't really aim to trade along from the middle of a range like this. I would wait for the market to come all the way down and then trade it long from the lower area of liquidity on that front. Looking at this S&P 500, took a. That looks messy, that chart, doesn't it? S&P 500. Yeah, it's not your charting that looks messy. Just the chart itself, the price action looks very choppy. So you've taken. I can't really make sense of that. Okay, that makes sense. So break a structure, and then the market went straight back up again. Yeah, it's just unfortunate, mate. Stop loss looks tiny on that one. Absolutely tiny when you think about the size of the move that we did have and the margin of availability there. So yeah, but I don't think on a 1 minute time frame it wasn't that bad, that's for sure. Right, let's have a look at this. Thoughts on this? This is from Jack Buckles. So we've got what is this one? So this is the DAX. Let's have a look at that. DAX. So we've got the nice big gap. You've plotted liquidity there. So that's very well done. Nice point of liquidity for sure. We've got, when was that then? Was that just now? So what time frame is that on? 15-minute time frame, yeah, so exactly the same. So we had this move down. Yeah, that's right. That's that move there. So this is like yesterday then. Sorry, this morning. Sorry, very early. Oh, no, it wasn't that early, actually. No, it was the normal time. So that then was your breaker structure point. Oh, no, it's not. No, that was your breaker structure point. Okay, cool. So straight away then, I've just kind of answered my own question. You've got that as your breaker structure point, which is great. That's the conservative, but I really like this area in here. 7:15 high. That's the Frankfurt session that's going on there. So that is a really nice area for the breaker structure. On a 1 minute time frame, you're already going to have bagged a few quid from that area there to that high there. Right, that's 24 pips. It's probably, I don't know what it would be. But it's gonna, based on a standardized trade at a 1 to 2 risk reward ratio, you're gonna bag a few quid there before you even reach that next high. Now the market in this one, it was basically a complete waste of time trading the European session this morning, which to be honest, it can be on a Monday morning sometimes, very often I would say. So you weren't wrong with your approach to this one, but I definitely would have been aiming for that more aggressive entry rather than the conservative one up there. That's the only criticism I would have. In terms of a target profit, you've got your TP well placed. Maybe your breaker structure, maybe your point of liquidity is a little bit too high. I like to cover the bottom with a margin underneath it in the zone there because, this area in here, commercials love coming down to these points in time. These kind of areas, they love coming down here. So just get into the habit of that, leaving a little bit of a margin inside, from the bottom of the zone to the final move, the last move that we had. But apart from that, yeah, looks good, mate. Looks good. Yeah, and that's about it, I think. Yeah, I think that's about it. Right, team. So I'm going to wrap things up there then. It doesn't look like there's any further questions, so good luck out there this afternoon. Remember, it is a Monday. We've got a lot of time left this week, so don't go and blow it all on a Monday afternoon. If you need me, I'm here. Please feel free to send in your charts or anything else that you'd like me to have a look at or examine. And yeah, let's get it done. It's been a pleasure, guys. Take care of yourselves. Good luck out there on YouTube as well. Remember, if you do want to come and try us out, please feel free. It is free to do so. You do not have to pay a penny to come and try out the service. And if you like it, then you can stick around. All right, so take care, guys. Have a good one, and I'll see you then. Bye-bye.